The news goes merrily along, and there's good and bad out there in the world of finance. We are joined by David Bahnsen, the managing partner and founder of the Bahnsen Group, and a good friend of the show. Hey, David, how are you doing?
Doing great. How are you?
I'm good. Look, it was a bad day on the market again today. I'm suspicious. I'll ask you why, but I'm suspicious it might have something to do with the Donald Trump whiskey rebellion of 2025 and the corresponding 200% threat of a tariff on champagne and wine coming out of Europe. I don't know what sent it into a tailspin today. Do you have any insight?
Yes, I think it is all part of one underlying story, which is essentially at various shapes and sizes connected to the ongoing threat of tariffs and the uncertainty and the trade war and a little lack of clarity as to what the end run is and where we're headed. And I think there's been some unfortunate messaging and communication. And my own view is one who is generally pretty fond of Treasury Secretary Bahnsen, pretty fond of the first Trump administration supply side commitments that were there from a lot of the economic advisors, but candidly not very fond of Commerce Secretary Howard Lutnick's approach to this issue. I think markets today were looking for Secretary Bahnsen to put their mind at ease that there is a little more clarity, a little more strategy, and a little more of a path forward. He had a pretty high profile interview on CNBC earlier. I don't think markets got from him what they wanted.
In fact, let's. It was a fairly short clip, but let's play the pith of the gist of what Bahnsen tried to communicate this morning. Cut 25.
As I told the Business Roundtable yesterday, as I tell your viewers, what we're trying to do is create economic certainty. We're going to do it with the tax plan. We're going to do it with deregulation. And I also said to the Business Round, I think it was 135 CEOs yesterday, if you came out with a plan similar to what DOGE wants to do with the federal government, all your stocks would go up 15 or 20%. It would be considered a miraculous restructuring, cost savings, and put you on a sustainable course. So I think we're not getting credit for this yet. I think we will.
What do you make of that, David?
Well, I think that if the DOGE issue were the real big concern, he'd have a great point there. It's just I don't think markets are concerned about DOGE. I think the left-wing media is concerned about DOGE, and there are certain people that might be in the weeds a little concerned at some of the way they've gone about things. But DOGE is not what's driving market volatility. It is uncertainty about trade and uncertainty about economic growth and the idea that the administration appears to believe that we could go ahead and have some short-term pain and even a recession and everything will be okay. That's not the message that markets were expecting in the new administration. It's not the message that markets got from the Trump administration in his first term.
Well, now the news isn't all bad, though, right? And I guess I want to clarify, make sure that you're on the same page I am, or if I'm even close to the same page you are, which is, do you differentiate between like what we're doing with Canada and what we're threatening to do with Europe on the champagne and wine? Is that a difference in substance to you than what we're doing with China on a national security level?
Not only is it different than China, it's different than itself. In other words, the Europe is different than the Canada, which is different than the Mexico, which is different than the Champagne, and that's part of the problem, is that we're not really talking about one conversation. We're not merely talking about we want to be a mercantilist nation now and a protectionist nation that no longer believes in global trade. That's not what we're dealing with. We're talking one day about fentanyl and another day about unfair deals with a country and another day about intellectual property theft. And then the champagne thing comes up and then that'll go away tomorrow, right? That's the issue markets are dealing with, is they do not know what we're talking about because we're talking about 8 different things at once.
There is some good signs within the public sector. Eggs are coming down. Oil is coming down a little bit in price. We saw the PPI number hit basically flatline, minus 0.1 if you take out core. It's looking like things are getting better in some parts of the economy, and the inflation worries are easing off. I guess to me, if this is all short-term bluster to get deals renegotiated and this goes away, I can't imagine, maybe he will, but I can't imagine the president doing this same tariff bluster a year, 2 years, 3 years out. I think he's getting this all out of the way now so that by the end of this year, that part's behind us. He's got the deals he wants, and then the economy just takes off. Theoretically?
Well, theoretically, I don't know that the administration has thought through it as succinctly as you just did in the last 40 seconds. That you should give some of the interviews for them, because that would be a much better way to make the case. But let me give you an analogy to 2017 and 18. What they did then was in 2017, he came in, there was significant and definable and measurable deregulation combined with the biggest business tax reform of our lifetimes, going from a totally non-competitive 35% rate to a middle-of-the-pack, hyper-competitive 21% rate. Done, signed, sealed, not DOGE, not executive order, codified into law. And by the way, that doesn't sunset. That was made permanent. That was year one. Then in year two, he started some of the trade stuff with China. The difference that markets are having to deal with now is there's no house money they're playing with. All right. The market was down in 2018, but it was up huge in 2017. Now he's coming in and he risks losing some of that political, not to mention financial capital to get the deals done he needs.
Fair enough. I guess to me, I'm not a big fan of tariffs. I'm just not. I'm not up to speed enough to be able to make that good of a case for them. But what I am hopefully willing to do is to give Trump at least a little latitude and hope it pans out and doesn't set in more than just a bluster to get somebody's attention and eventually get to where he wants to go and cutting deals. But I want to, in our closing 3-4 minutes together, there was some very good news yesterday that was relatively unreported that I smell your fingerprints all over, and it's a very good thing if true. And that is JP Morgan and Chase yesterday committed to end the practice of religious and/or political debanking. And I think you had something to do with it, didn't you? Am I reading that the right way?
Well, you are, and it's been more than just a story from yesterday. This has been going on for some time, and It's been just a tremendous experience and really, really positive result. My view was that JP Morgan was never debanking at the corporate level. There was never a time where Park Avenue was saying, go shut down those conservatives and Christians, but it was happening in the organization, and it had to have a light shined on it. And we sued them, and the SEC ruled in our favor. And I got to speak at the shareholder meeting and hear Jamie Dimon, who I consider to be one of the most successful CEOs in America,
of course,
say it will never, ever, ever happen again. They took out some of the egregious restrictions they had when they bought a payment processor that was going to allow them to shut people down for not believing the right things. They got rid of all of that. They take our calls whenever we call them. They've worked with us. I believe that JP Morgan has made substantive improvement in the right direction, and they did it because we engaged in fruitful conversation, and I'm really pleased with the results.
I am too. And again, it only takes an instance like this before the entire industry falls in line, right? I mean, is it safe to say we have finally hit this whole peak of debanking of religious people and conservatives?
Yeah, the debanking moment and the overall woke, critical theory, ESG, there's a whole lot of things, the DEI, all of that peakness is in the rearview mirror. Absolutely. Now there's still more work to do and there's more wood to chop, but we're definitely making progress.
But it sounds like they're being transparent, and they're allowing you to verify, so we can trust them. The old Reagan line. On behalf of conservatives, on behalf of fellow believers like myself, I can't thank you enough for drawing attention to this. And this is real progress. This is real improvement. And it came at the hands of David Bahnsen and a lot of his friends. Follow David over on Twitter X at David Bahnsen. And check out the Bahnsen Group if you are an investor.